In today's video, I'm discussing investors' two biggest fears about joining an apartment syndication. I'll tell you about them and how I overcame them in order to invest in this fantastic opportunity. The first is the illiquid nature of real estate investing. When there's a real asset, a building, a property behind it, it's not so easy to just take your money out like it is with a stock market. So you really need to think about any real estate investing as an illiquid proposition. You want to invest and hold that until you can sell the property or refinance it and get your capital back. And that's true in a real estate syndication as well. The other reason is the loss of control. So in a real estate syndication, the general partners have the business plan, they're executing the business plan, they're looking out for the health of the business, and it is their job to make sure that they are executing it to the best of their ability and to create the returns that all of the investors are looking for. So with both of those, how do you get over them? How do you get past them in order for you to feel comfortable investing in your first real estate syndication? I'll tell you how it worked for me. Let's first talk about the illiquidity of the investment. Well, first of all, if you think you're going to need this money anytime soon, you should not be investing in an illiquid investment like a real estate syndication or real estate in general. So you need to think about this as part of your long-term investing strategy and the money that you are setting aside for that purpose. So once you're talking about investing for the long term, then I think about it in terms of asset allocation. And when you talk to many financial advisors, they will tell you that you need to have a portfolio of investments that are allocated across different asset classes to take advantage of market opportunities, but also create a balanced portfolio for yourself going forward. Now, asset allocation is just how you structure your portfolio. How much is going to bonds, stocks, international, private placements, and so forth. So most people will think about that in terms of the stock market, but high wealth individuals will also allocate a portion of their portfolio to private placements. A real estate syndication is a form of a private placement. Now, why do they do this? Well, they do this because there's often some opportunities in private placements that aren't available to the general public through the stock market. Real estate syndications are one of them. So when I start thinking about allocating my portfolio, I think about what portion of my portfolio I want to allocate to real estate, and I also think about what portion of my portfolio I want to allocate toward private placements. Now, private placements are very common among accredited investors, which are high wealth individuals. However, they're less common among unaccredited investors because in order to invest, you have to have a prior relationship with the sponsor of those private placements. The reason many accredited investors invest in real estate syndications is because of two things. One, they've recognized that real estate is an important asset class to participate in for long-term wealth building. And two, private placements in particular often provide outsized returns over the stock market in general. So when you start to think about your participation in a real estate syndication as part of your long-term wealth building strategy and a portion of your portfolio, it gets a lot easier to think about the illiquidity of it because it's something that you're in for the long term anyway. And so for me, that was a good reason for me to go ahead and move forward with real estate syndications. The other way to look at it is that it's a protection. So not only is it illiquid for you, it is illiquid for all of the investors. And just think, if you've invested because this is a long-term strategy for you, you like the business plan, you like the sponsors, and you believe you're going to achieve the returns that you're looking for, what would happen if other investors decided that they wanted to take their money out and force the sale of the property? Well, one, that would certainly be very expensive. And two, you wouldn't likely get the returns you were looking for, and you would have absolutely no control over that. So by turning over the execution of that business plan to your general partners or sponsors that you trust, well, that protects you from other investors that may on a whim need to change their investment strategy and try to pull out. Now, ultimately, that's generally not possible within the first year. And there is a rare occasion that it could be possible to pull your money out during a syndication, but it's very expensive. Most syndications that I see, if they do allow for that, it will be only at the expense of the person withdrawing their money, and it is expensive. So really, you need to think about this as a long-term investment. Now let's talk about the second biggest fear, and that's the loss of control. So I don't think anybody really wants the control of the property on the day-to-day. Do you really want to know who's mowing the lawn, which tenants are having which issues, which pool person is coming for maintenance this week, which carpet color we're picking? So I think a lot of times it's not the control of the day-to-day. People's biggest concern really is, what if something goes wrong? And if something's going wrong, what can I do about it? Well, I look at this two ways. The first is, hopefully, you've chosen this investment because you've vetted your deal sponsors, that you believe your deal sponsors have the expertise to execute the deal and make good decisions, and ultimately work through those challenges that always come up in an apartment building investment opportunity. Another way that I've got myself comfortable with real estate syndications is to think about how much control I really have in the other investments in my portfolio. So many people invest in index funds. Do you really have any control in an index fund? It's a big basket of stocks. It's subject to the whims of the market. I would say that's probably got the least control of any of the types of things in my portfolio. Or maybe you invest in mutual funds. I do. And mutual funds, how much do you really know about what that mutual fund is buying or selling any given day? What about the manager? Do you know the manager's track record? Do you understand what the manager is doing? Do you have a relationship with them? Now, look, there's certainly a lot of data out there, but how much research are people doing on their mutual fund managers? In fact, if you invest in a target fund, like a lot of times you'll hear a retirement 2030 fund or 2050, 40 fund or what have you. That is a fund of mutual funds. And what large investment houses will do is they will often use those target funds to create track records for small mutual funds. So startup mutual funds, new fund managers, those are the funds that those target funds will often pick. Now they'll pick some big name ones as well, but they'll use this as a feeder program. So when you invest in target funds, how much do you really know and how much control do you really have over those assets? All of that information can be found out, but are you finding out? So for me, I think about my real estate syndications as ones where I have much more control than I do in many of my other investments. One, I'm picking the deal. I know the details of the deal. I know the financials. I personally know the sponsors. I know I can call them. I know I can find out information. So for me, it actually creates more of a sense of control than many of my other investments, which can go up or down on the whims of Wall Street without really any say on my part. I hope this video helped you think about real estate syndications in a different way. These were things that helped me to invest in my first one. And I can tell you this, it gets a lot easier. After you do the first one, they start to look very similar and you get more comfortable, especially as you see how they get executed and the results that the sponsor's delivering. Make sure to watch the next video in our series where we talk about the legal documents and mechanics of a real estate syndication and what to expect as a limited partner. Until next time, I'm Michael Parks, helping you to invest in apartment buildings to live life on your own terms. Hi, real estate investors. Be sure to check out my newest investment opportunity, which is a 34-unit apartment community just outside of Knoxville, Tennessee. The business plan is targeting over 15% annual returns. The apartments are in very good condition structurally. They were built in the late 80s and early 90s. However, they're getting a little tired, which makes it a perfect value-add play. We're going to go in, make it a dog-friendly community. We're going to add a dog park. We're going to make the pool a much more attractive area to hang out and enjoy. We'll be changing flooring over, improving kitchens, lighting packages, paint, and fixing some deferred maintenance. It's ultimately going to drive our rents up significantly and create a great return for our investors. If you're interested in learning more, make sure to check it out at spireinvestmentproperties.com/TN deal.